Good afternoon, everyone. I hope everyone is staying warm in this nice cold weather. Um, but I want to welcome you to Cattle HQ Live. It's a webinar series that is brought to you by SDSU Extension. And today we are going to have Matt Diersen visit with you about markets and inventories. And Matt is part of the NASS College of Management and Economics. And we just got some of the cattle reports that was just out in January. And so he's going to be bringing you some of that information. So today, you've got a couple options if you want to ask questions. If you can see on the bottom of your screen, you can see a Q&A with a question mark that you can put your questions in there, or you can put them into the chat and we can all be monitoring the chat and such. So if I need to interrupt him as he goes, we'll do that. Or otherwise we'll hold them to the end and then you'll have your opportunity. So welcome today and hope you enjoy Matt's presentation. I'll turn it over to you, Matt.
All right, sounds good. Thank you, Julie. Thank you, everybody, for your attendance today. If you've got questions, I don't think it would bother me if you needed or wanted to interrupt during the presentation. I hope to leave plenty of time at the end for questions as well. So share my screen here and get started. So take a look at some of the different cattle market content and some of the latest inventories, looking at things both from the national perspective and the South Dakota specific numbers, because we've got a little bit of a difference there to kind of highlight. Big picture, the cattle cycle continues. So here's the U.S. total cattle inventory. So this is all classes of cattle, dairy and beef types, showing that the cattle cycle is sort of continuing to be below 90 million head across the United States. Just the general pattern that we expect to see. Where are those cattle located? To me, this kind of helps folks that think about things spatially. So you see a couple of the darker the state, the more cattle they tend to have. Texas, for example, shows up both very large beef numbers, but also very large milk cow numbers and milk numbers. The same with California, and then that's why Wisconsin shows up, and then Nebraska and Kansas with cattle on feed, helping to boost their total aggregate or overall inventory numbers. So this is the zooming in a little bit on the beef cow side of things. You can see that here Texas would lead the way with over 4 million head of beef cows that calved last year, or as of the January 1 inventory. You can see Missouri is a number three state after Oklahoma there, just showing where the majority of the beef cow calf herds and operations would be located, the Central Plains states. I've got to do one little adjustment here. Too many screens, so I'm looking at the wrong thing all the time. In addition to the all cattle number being lower, number of beef cows was down, and here the number of beef replacement heifers continues to be lower than in the last couple of years, or low relative to where we'd be at in the cattle cycle. So expansion has not occurred, and the indications are that it will not occur in aggregate here anytime soon. So until you see that beef replacement number higher is when you'd start to see a real uptick in terms of numbers, but this number isn't keeping up with the number or the size of the decline in the beef cow herd. So we're going to continue to see contraction going forward here in the short run. The other related thing, so all the other numbers were also down at the national level. The only category that had any kind of a change at all was the calf number. The calf crop wasn't quite as low as trade expectations. As a result, gave a little bit of a reprieve, but you still have an aggregate decline in feeder cattle supplies outside of feedlots. Um, Part of that too would have been due to a little bit of the effect of feeder cattle imports from Mexico were stopped because of the screwworm concerns end of the year. So at this time, the snapshot was taken here, January 1. That reduction would be in there as well. That but going forward, that means with fewer cattle in general to replenish or restock what's on feed, you've got tighter supplies at all kind of levels or all different levels of um, of the cattle market at this time. Taking a look spatially, where are feeder cattle supplies outside of feedlots? Again, it kind of follows the cow-calf states, but a lot more states show up in gray on the map here. That's because with less and less states with a significant number of operations, cattle operations, you've got fewer and fewer being broken out in NASS reports. So you've got several states. It's not that they don't have any feeder cattle outside of feedlots, but the number that they have is low, or number of operations reporting is so low that we don't have a good data breakdown for most of them. So the one state that's still listed there, but it's kind of called into question a little bit more, would be Minnesota to the east of us here, because they still report cattle on feed number in an annual level, but they don't have it broken out in the regular cattle on feed reports anymore. So a little bit of a change there, making it a little more difficult to see or have an appreciation for where the cattle would be located. This is the last mapping that's directly like this, but you can also see that when you'd have the drought conditions in the west, what that would do or where that might affect things. So if you're really going to move numbers, you'd see an effect down in the southern plain states would have an immediate effect, for example. The tighter inventory levels and numbers overall bodes well from a profitability standpoint. So this from the LMIC shows the projections they have for cow-calf returns for the next 2 years. So the current year is 25 in there. So that says that, hey, this fall, if you had a cow-calf operation, you'd be expecting returns a little better than you saw in 2024, which are really good relative to historic levels. And the expectation for 2026 is really good relative to 25 and relative to recent years. To put the recent return levels in perspective, so from say 24, 25, 26, you can see that on a nominal basis, they exceed the levels from 2014, 2015 in there. However, you finally, here in the last year, have taken and received a nominal value that exceeds the inflation adjusted level that you would have seen back in 14, 15. So really on a real basis, you're finally getting cow-calf returns high enough that you might again warrant considering expansion. And expansion's been held in check a little bit because of other forces as well. But it really starts to show that it's probably time where you're going to actually see returns giving incentive, solid incentive to expand. If you want some more information on prices and other things, I do a lot these days leaning on the Livestock Marketing Information Center located just outside of Denver, Colorado, and supported by South Dakota State University and several other states. If you would like some more information about the LMIC or like access to it, you see I've got the red book highlighted there. Back of your red book lists several members of the beef team. My contact information's on the back there too. If you like LMIC access and you don't have access to the members only page, let one of us know and we can try to get you the temporary username and password, let you in, let you see what that's all about, see if it's something you might find useful for your operation as well. Otherwise, you're free to use the generally available stuff at any time. And most notably, we've got the In the Cattle Market series highlighted in there. I'm one of the authors, along with authors from 6 or 7 other states. Once a week, we put out some information on the cattle markets. So, might encourage you to take a look at that. Also, with the inventory numbers and such, just wanted to see if that did make any changes in the USDA baseline. The baseline's been out. You can see there in the chart, it's been out. Preliminary numbers were out since November, but the Outlook conference is late next week, and they didn't make any recent adjustments in the baseline projection book that came out yesterday. So there's really no change in what had been anticipated with a lower inventory level, perhaps bottoming out in 2025. Otherwise, in 2026, then the inventories are expected to increase as this cattle cycle comes to an end. But it still means good calf prices in 25 relative to 24 and 26 relative to 25 and relative to 24 before they start to fall off again. Prices are shown on the right-hand side. That's a calf price for the USDA, but it is highly correlated and tends to track fairly well with the 5 to 6 weight steer price out of South Dakota. So just for perspective, what that next cycle might look like as inventories would expand and the calf price would come down. So high prices are there now. They're not guaranteed to be there forever, if you think about it from a cycle perspective. A couple of other factors that have done a lot to change what's happening on the beef side. We've got corn prices sharply lower price levels compared to a year ago, and finally running below the 5-year average. That more affordable corn as an input has done a lot to encourage more cattle feeding. So cattle are on feed for a longer period of time, finishing at heavier weights. Also has done a lot to expand the price spread between, or price slide, and the price difference between lightweight animals and heavier animals for the most part. So corn's one major factor. The other related factor would be the price of hay. The price of hay has come down both substantially from last year and the 5-year average. That more affordable hay continues to see roughage put into the diet. It's indicative of improved pasture grazing range conditions across the U.S. That would be in general. So these prices are only through December. There's been some drier conditions with snow, less snowfall in some areas and some drought conditions emerging. At the same time, we can't, looking at the national picture, the overall situation has improved compared to where we've been the last couple of years, helping again with that price spread, letting a margin be wider between calves and feeder cattle, for example. There was also more new seeding of alfalfa last year. So new seeding last year means more acres likely to be harvested here in 25 compared to 24. Spatially, stocks were up a little bit as of December 1, just to show you where those stocks are located. So you've got decent stock levels down in Texas and Missouri. South Dakota stocks were up quite a bit from a year ago. So it really took the short run pressure off of the hay situation heading into the winter feeding period. At this time, before I show you some of the hard South Dakota numbers, I'd just like to take your pulse as participants today. If you are a cow calf, or if you're in the cattle industry, just appreciate knowing if producers, say in South Dakota or the general region, are they expanding or trying to expand, holding back heifers? Are they continuing to contract? Are they just holding steady? Or if you're unsure or don't know, just throw that out there, as that would be a viable answer. Again, I'm just trying to just get a feel for the audience in terms of what folks might be seeing locally in the region. as far as, do you think, or are you seeing indications of producers trying to expand or contract on the cattle side of things? Give that another minute or so here. Tells me I can't vote, so I'll just sit here on the sides. And Matt, have we had responses there?
I've got one in chat as a C.
Okay. Well, I can't do anything about. I'm not in control of the survey. It's just out there. But if you want to click on one of the little buttons, and then that's going to take care of it. And if,
yes, we have about 65% have
all right.
voted. So
going once, going twice. Why don't we stop that then and share the results? Well, there we go. Split pretty evenly between, I see 7 expand and 5 no change. Okay. Very good. Well, thank you, folks. Let's see what NASS recorded for South Dakota. Whoops. I'll get to the hard details. First, a very long run view. This goes back to 1937, just total all cattle calves inventory, South Dakota. So you can see very far on the right-hand side. We have had a few years in a row of inventories being on the decrease. Here in 25, January 1, finally had an uptick from that bottom recent low, say, put in 24. So the NASS survey showed for South Dakota, all cattle and calves number was up slightly. I track the more recent years just to give a little bit of a breakdown. You can see here for beef cows, the number was down slightly from the last couple of years. Some of the beef cow stuff or beef cow numbers have been offset by an increase in milk cow numbers in the state. But not enough to offset the total decline. But it is a partial substitution effect of a milk cow for a beef cow. The other two female categories on here, there's more other heifers and more replacement heifers. Now, the increase in beef replacements isn't enough to offset what had been another decline in the beef cow number at the state level, but at least it was an uptick in terms of the absolute number, and that other heifer number meant, and that number was up. It's maybe not terribly stark on the chart here, but relative to other states, it was up pretty good in terms of an absolute change and a percentage change and such. So if you're looking for heifers, I think of these as heifers that the producers are undecided about, might still end up going into replacements, or could end up going into running on grass or end up on feed yet. So that category or class is a pretty good indication of producers kind of keeping their options open when you think about moving forward. On the other side, that smaller beef cow number did result in a smaller calf crop during 24. So we don't know the 25 calf crop, but for the 24 calf crop, consistent to see that be down a little bit because the number of cows was down. The bottom row on there is the number on feed that was up slightly, mainly due to an increase in cattle being fed at small feedlots. And then taking all those numbers, put them together, gives a residual number of feeder cattle outside of feedlots. So there's a few more calves in inventory in South Dakota, a few, some more other heifers and a few more steers. So that results in a bigger number of feeder cattle outside of feedlots. So shows a little bit of retaining ownership across classes. As we look back at the end of 2024 relative to what we've seen in recent years. Taking a look quick at the cattle on feed numbers, these are just for South Dakota, the small lots and large lots. So shown there on the far bottom corner of the right-hand side there, you've got an uptick in number of cattle on feed in feedlots with less than one, say that quick, 7 times. Smaller number, increase in the number of cattle on feed in feedlots with less than 1,000 head of capacity. So more cattle on feed in the small feedlots and steady on the large feedlot side of things. You can see that small feedlots are very important in South Dakota, making up half of the on-feed inventory as of January 1 of the year. You say all that or go through all that in part to highlight the fact that at the national level, there's only 2 states with a significant increase in cattle, feeder cattle outside of feedlots this year compared to last year. You can see the only 2 states that are shown in the slightly darker blue would be Texas down at the bottom, and then South Dakota with 115,000 more feeder cattle outside of feedlots compared to last year at this time. So it's hard to go around the country and find a place with a substantial supply of feeders to draw from outside of South Dakota and Texas. You can see Oklahoma there down 170,000, pretty much offsets or offsets a large chunk of the increase to its neighbor to the south. One other thing along those lines, or just consistent with that, is the feeder cattle, or is the auction data from the South Dakota Auction Agency. Nice folks out in Pierre are sending this out to us. So if we look at 22 and 23 relative to 21, you can see most of the quarters have lower inventories. So fewer cattle were available and moved through South Dakota auction locations in those years. 24, numbers were down slightly. You can see in the first quarter, and we still don't have the fourth quarter report. I would expect that too would be down, not because the inventory levels were down dramatically, but more because a few more animals would have been retained or not run through a sale in late 2024. To see that, how that plays out, if we take a look at prices, as we finished 2024, we're on our way back up to a pretty good price level of close to $350 a hundredweight for 5 to 6 weight steer calves, run through an AMS reported South Dakota sale location. As we started 2025, the first week stayed below 350, but since then it's been consistently in that 360, 370 area for calf price. So 5 to 6 weight steer calf with no additional labeling or commentary on it. It's not there. This is strictly stuff that would be large number ones, and for the most part with no fleshy, no thin or anything else as far as any kind of identification on it. And so that price has been fairly steady since the beginning of the year. We take those weekly prices in part with some other information too, and put together monthly South Dakota cattle prices and basis levels. So we've got a series of AMS reported fed cattle out of Sioux Falls Regional. That's the fed steer line. We've got stockers, which are 5 to 6 weights. AMS barns, feeders are 7 to 9 weight feeders. Again, reported out of AMS barns. And the final series on there are cull cows. Normally, we've been using an AMS reported series out of the Sioux Falls Regional Livestock location. But as of December, they no longer have an AMS reporter down there for cull cows. So the price in December is a simple average of black hided cull cows weighing 1,500 to 2,000 pounds. Just a simple average for the the number of heads sold at that location during that month. So, if you are interested in that set of cash prices, these are monthly average cash prices for the last 5 years and monthly average basis levels for fed cattle, feeders, and stockers or calves. Those are available on the extension.sdstate.edu webpage. It's a short publication called Monthly Cattle Prices and Basis Levels. I'm the author, been putting it together for several years just to give you a general overview and guide. It's got that price chart on there and various price and basis tables. QR code there on the right, according to Julie Walker, takes you right to the page you see there. So if you want, you can use that as a resource. We take those prices and basis levels and do some calculations at times such as this. There's pretty strong seasonality in the fed cattle price, tends to be a little higher April and May and a little lower later in the year. That tends to be reflected in the basis level. And I'm showing two sets of basis numbers here. The line going through there is the 5-year average basis from 2019 through 2023. So that would have been the basis you'd have expected to see during 2024. Then I overlaid the observed basis levels from 2024. And you can see that February, the basis was a little wider than you would have expected. In July, it was sharply higher or stronger than you would have expected. So in July, for example, just the cash price was strong relative to a lower futures price in the month of August. So this is always the nearby basis. But just thought I'd show that. And then what I normally do, or how I normally think about it, I use a 5-year average basis. So here's the rolling 5-year average basis for fed steers. So you can see that January and February, I'd expect a small negative basis and then pretty good basis in May because you'd have still high cash price in April and May relative to a lower futures price. The June futures, for example, expires at the very end of the month of June. So you got that strong cash seasonal pattern reflected in the typical basis we'd observe here. That basis level gets very small when you look at September, October, November. Does show up very close to zero right now in terms of the 5-year average for the month of December. So I would, without any other information, I'd think about that 5-year average basis for fed cattle. And here's the just Sioux Falls Regional, for example. With feeder steers, a little bit different. You don't have a consistent seasonality, or it's not quite as pronounced of a seasonality in a cash price. And we've also got different months of the year where there's very low cash volume in South Dakota. For example, June, July, it's the volume run through tends to be much lower than at other times of the year. So if I think about basis on feeder cattle, you can see you got a lot of it around $6 a hundred weight right now for South Dakota, 7 to 9 weights relative to the nearby futures price, which settles to the CME feeder cattle index or a nationwide averaging of prices. So the price in South Dakota on a 7 to 9 weight steer would just be consistently better or higher than the price in other parts of the country. So it's not, again, not much about seasonality and such, just more about absolute relative premium for cattle from South Dakota relative to other locations. And then that 5-year average tends to work pretty well, as it's just reflecting a different location. Now we get to calves and things are a little bit more complicated or tricky. I've got two sets on here. One is the 5-year average, which you might be inclined to use, but then I've also overlaid just the 2024 on there. Relative to the 5-year average, price of corn and price of hay has fallen. Both prices have fallen a lot, and that meant the the cost to get a 5 weight up to an 8 weight, for example, would be much lower. And that means the basis or price difference between cash price and the futures price would be much higher last year, and I would expect in 25 relative to the 5-year average. So because of that, I would not be inclined to use the 5-year average for calves or stocker cattle, but I would look at the 24 and use that as my first proxy or guess at what basis would look like on calves. So that means, for example, October, November, looking at more like a $70 basis than a $40 basis. If you're thinking about the cash price 5 to 6 weight versus the feeder cattle futures price. So just throwing it out there. Futures prices can change. I want to highlight this just to show here's live cattle futures. So very end of January, beginning of February, you had this is the June futures price. So that wasn't what was happening in the spot market. That was happening for cattle that would be deliverable at the end of June. So like the nearby prices and the cash prices, it followed that same uptick and got close to or just above $200 for a very short duration or stretch there before prices fell back. So as of yesterday, I believe, the price was back down to 190. So with the futures price, it is not going to reflect the same underlying pattern. If we use a specific futures contract, this would be more or better thought of as a market consensus forecast of what the price would be at a specific point in time, in this case, the end of June. So wanted to show that that price has gone up substantially. It's fallen back a little bit here. I'm going to show one other price series as well and talk about something specific with it. This is the same general overview, except this time I've got the March feeder cattle futures price on there. I've got a little story to go with this one. See if I can get a marker pulled up here. Just going to use a little bit of a laser. So right now, this price had gotten up real close, touched 280 there a couple of weeks ago. But this is the price for feeder cattle that will be sold, and the March futures contract expires the last Thursday or the very end of the month of March. Most feeder cattle background or put on feed for the winter were done back here in October and November when the futures price was much lower, down around 245. So it was a relatively low price at the time with hindsight. And the incentive at the time was if you've got calves, makes sense to keep them, feed them yourself or feed them locally, add weight to be sold in the end of March. And since then, the price has increased substantially. So now on the board, on paper profit, the price is up about $30 a hundredweight. 30 times 8 is about $240 per head more than back in October, November. A lot of producers in the cattle side of things have looked at livestock risk protection on things like backgrounded cattle or cow-calf calves just about or starting to hit the ground now, and also unfed cattle. So as LRP has gained in popularity, what do you do after price has increased? It's good news. The price has gone up. You didn't lock in the price like you do with futures, where you've set the price level. You've put a floor price in place and you've left the upside open. Well, here the upside has started to pay off. So I've got one more thing to show along these lines. Guess I got to get my laser pointer here. The other thing that's happened in the market is the volatility kind of spiked a little bit At the same time, the futures did its run up, the volatility increased, and now that's come back down a little bit as well. I mentioned LRP, so I'm going to focus on that here just a little bit. LRP is price protection, functions a lot like put options. It's been available for about, I want to say, almost 20 years now. Here's the last 10 years. The volume on this had attracted a little attention for a while. When they changed the subsidy around starting in 21, it really took off at the national level. Last year, for the full fiscal year, almost 5 million head were insured for feeder cattle across the United States, and a fair chunk for the state of South Dakota. That fiscal year runs from July 1 through June 30th. So for 2025, that fiscal year started back on July 1st of 2024. So what we see here is about 7.5 to 8 months worth of head that could have been insured during this current fiscal year. So as long as that number is more than half or more than 3/4 of last year's level, we should see an uptick in total volume used, or total volume in terms of number of head covered with LRP during this fiscal year, just to put the number in perspective relative to last year. So this thing has gained a lot of popularity. A lot of producers are using it both in South Dakota and around the country, and the prospects for 25 suggest a fair number of producers have or are continuing to use the product in 2025 as well. Long story short, a lot of producers might have bought LRP back when they started backgrounding or hanging on to calves they didn't sell late last fall. They're still holding on to it. They have LRP protection in place. The prices have gone up. Now, is there something you might do in a situation where the smallest time period you can have LRP in place is 13 weeks? Well, 13 weeks is longer than the time frame left between now and the end of March, when you might be looking to sell backgrounded cattle. You might look at June, the June live cattle. If you've got fed cattle on hand, already being fed, that would, the June futures, the options on that expire in the end of May. So already in the window where you can't replicate or layer on another round of LRP to take advantage of higher prices available now compared to when you started backgrounding or started feeding. All that I lay out to suggest that there would be some other things you could do, I call them sort of rolling strategies. You bought LRP, the price has increased. What might you do now? You don't have to do anything. You've still got floor price protection in place like you did before. You could consider buying a put option resulting in a higher floor price. If you're doing that, you need to visit with a commodity broker. You can't go back and buy LRP again or buy another round of LRP because the duration or time frame doesn't align with what you've got probably left for feeding. You could sell a futures contract and lock in the price, preferably at a much higher level than you were looking at getting with a floor price before. Or you could sell a futures contract and buy an out of the money call or build a synthetic put. And you might do that if the volatility was really high, like it had been a couple of weeks ago. Volatility's come back down a little bit since then, so that number 4 option, but certainly number 2 and 3 might still be viable. Again, just something to think about if you've done the whole, dotted all your I's, crossed all your T's, went with LRP like a lot of producers have done, and what that means for you. So that's it for my prepared thoughts and remarks. Seems like I went through stuff a little bit quicker than I was expecting. But Julie promised me she would pelt me with a question if I left too much time. So
I did promise you that, Matt.
Are there specifics on the presentation out there, specific questions on the presentation? Otherwise, I can stop sharing the slides and just answer questions as well. So I'd say first, if there's something I could clarify or a chart someone wants to see, I could back up. Otherwise, I'll stop sharing the screen. And there is my contact information. If you'd like an email address, otherwise my office phone number, which is also on the back of the herd book.
So Matt, while everyone's thinking of your questions for you, I have one. So you had the
Yes.
one map of the U.S. that had feeder cattle increasing, I think, in South Dakota and Texas. That was
Yes.
the only two places. I'm gonna, and maybe some other extension people might need to chime in here, but what do you think the cause is that we've seen that increase in South Dakota and in Texas where they haven't in other regions of the country?
Well, that was very specific to feeder cattle outside of feedlots. So it took a combination of things. We don't know. There maybe were some numbers that changed in those non-reporting states. But when we did some of the math on that too, and it's like the changes predominantly happen in the larger states. So the reported states are picking up most of the activity. South Dakota's, I think, is explained with having a few more calves on hand, more, especially other heifers on hand. That is different in Texas. In Texas, they didn't have an increase in, if I'm remembering right, they didn't have an increase in beef replacements. So their inventories were driven by more calves and such there, and maybe a small change in cattle on feed down there as well. But those other states, it means there's literally fewer cattle to go around.
Hey, any questions from our guests or participants today? We would like Matt to have lots of tough questions. Just because I'm a good friend and a coworker that wants that, so.
Of course. It can't be too cold out there anymore. Gee, it's nice out.
Well, it's warming up. It's above zero.
Well, I'll just put another plug in for the LMAC. They have price projections as well, which would complement what you might get out of the USDA here in the short run. And the price and basis stuff, I mean, from a planning perspective, that basis stuff could also be useful for livestock risk protection. I would expect similar basis levels to be used there as well.
And I would echo that because I go to there often to get their data so that I can make informed decisions and help producers potentially figure out what their options are. So having that opportunity for producers to get that information. And it's got a lot of things right at your fingertips, so you don't have to go to 10 different sites. So that's what I really like about it. And it's very accurate, and it has a lot of talented people that are gathering that information at that site. So.
And it's your tax dollars directly supporting it too. So,
Correct.
It's a resource you're paying.
Oh, wait, we have one in the Q&A. Let's see if I can find. So where do small ranchers find calves other than auctions?
Just in general, I think you look around the neighborhood. Plenty of producers have tried to do private treaty or direct sales with others, especially if they can stop a neighbor from driving 50 miles one way and them following and bringing the same cattle 50 miles back. So cutting out that the unnecessary transportation expense. Other than that, I'm not sure, because what you end up doing if you try to do a different type of direct sale is introduce more transactions cost back onto it with using an order buyer of some kind.
Any of our other extension have other options or ideas for that question? When I think about it as knowing your neighbors, knowing the producers in that area, would be a really good option for that. So,
And I totally get the seller might not be wanting to do that because they want the competition driven best price out of the sale barn. So I mean, they have an incentive to go and use the auction setting, and that's where that's makes it tough if you're just trying to buy a small number of head, or trying to buy, in this case, really local, next door or something like that. That might still not, that has to work for both parties involved.
other questions? So I have another one here. I have two. Explain how LRP normally works and why the spike in prices makes futures move necessarily. And I'll let you answer that one. Can you see the Q&A questions, Matt? Down at the bottom.
Yes.
So,
Okay. So how does LRP normally work? Normally with LRP, you work with an insurance agent. You see a price level available, maybe for unborn calves, maybe for calves, maybe for feeder weights, maybe for fed cattle. So there's different sizes of animals where you can buy the insurance. It's just price insurance, so you're not insuring against cold and death loss and poor gains or anything else. Strictly price insurance. You buy coverage on a day tied to a specific end date when you'd sell the animals. So if I was going to, the background example was one I've been using. I decided to feed my cattle until the end of March. I bought coverage to end in the end of March, and you pay a premium for that back when you buy the coverage. End of March, you owe the premium, and at that time, the price level has increased. So with higher prices compared to when you bought the coverage, there would be no indemnity payment. So you paid your premium, and you're going to get the higher cash price in the open market. That's how it normally works. Why the spike in prices makes for okay, because the futures prices have increased, I'll say dramatically or a lot since you bought the coverage. Now your animals on paper on the board would be worth a lot more. So if you could move your floor price from say 240 to 260, well, that would put an extra $20 a hundredweight in your pocket, or move your floor up $20 a hundredweight. If there was a big time span left where you would be insuring lightweight calves and then buying LRP again to insure feeder weights, heavier weight calves, you could do that with LRP. But a drawback or a limitation of LRP is that you have to buy at least 13 weeks of coverage. And if you're going to sell in 12 weeks, you're outside of the LRP window. So then something like an LRP doesn't let you fix the price like futures would do. So that's what got me thinking about either rolling up using a put or using a futures contract. That was the motivation. Very high prices and short windows or shorter windows with LRP. So there's another question. Are the cash prices about the same across the state of South Dakota as a whole, or do they vary? When we've looked across different locations, they do vary. Sometimes there's not invalid. There's varied reasons for that. Sometimes sometimes the prices can be higher in the east than in the west, or higher in the south compared to the north. So sometimes it's tied to the availability of feed in a given area at a given time. Sometimes it has to do with some of the transactions cost you'd observe in the market. If there's branding charges and stuff, you might get a higher price, but it would just reflect the added cost to do to cover the branding fees and such. So, or brand inspection fees. So sometimes you end up with differences like that. Some sale locations are better known for bigger lots, and those can sometimes have or command a premium. And then you hear at times hot markets, so more buyers are attracted to a given location, and that increased competition gives a little bit of a price difference. So generally, when we see them and find them, they're often explained by differences like that. So it would be they would vary, but not by unreasonable amounts where it's like, oh, all of South Dakota is missing out on that one hot sale location someplace. So usually nothing that isn't readily explained by freight or shipping, trucking differences, and other normal charges. In summary, there's also just more of a comment saying, in summary, the takeaway is that herd rebuilding is on hold for the country, but perhaps starting in South Dakota. That's my observation. It's clearly not happening at the national level, and I'd say South Dakota is in a position where producers could expand. You still need good moisture this winter, a good green up. So there's still some ifs, but there's the necessary calves and females available to expand the beef herd if the signals continue to be there to do so. At the same time, you're not hanging on to that other heifer for nothing. It's valuable if you send that into the on-feed market as well. But that's what I'm seeing.
We do have another question. It's, are there a lot of producers enrolled in LRP programs and seeing a decent benefit?
Anecdotally, when I've visited with producers that have purchased LRP, they tend to be satisfied with it. You would not have people jumping up and down about it right now because they paid for the insurance and the price is super high relative to when they bought it. So they're not going to be collecting much, but at the same time, they had the peace of mind throughout the time period. They had the coverage in place. And at other times when the price has fallen a lot after they bought LRP, those producers have been very happy. It's like, I had LRP in place and it worked. So the added benefit of LRP right now is with that high subsidy, it's very affordable relative to other options.
I commend these people for asking questions.
I thought that was just you out there asking me over and over.
I know. I like this. So is there any other questions? So I'm just going to tell you, Matt, thank you today for sharing information on the markets and then inventory. If you have questions or you think of questions later, please reach out to Matt. He will gladly answer your question. You can do that through a phone call or an email. So don't hesitate. If you think of something later or you didn't want to ask it online, and that for reason was you wanted to sorry, didn't mean to, but if you
No.
have interest and you want us or Matt in this case to come out and visit with the group, please reach out to us, because if we can make it happen, we certainly would do that. And that's part of our job, our responsibilities for the state, and we actually thoroughly enjoy that. So it's kind of nice. So yeah. Okay, so thank you again, Matt, for speaking with us today. If you have specific questions, don't hesitate to reach out to Matt. Next month, we'll be talking about spring pastures. You will be emailed a brief 2-question survey at the conclusion of the webinar. We would greatly appreciate if you would fill that out, because we're using it to continue to modify the webinars to meet the needs of the producers. So please take a few moments to do that. We greatly appreciate you taking time to listen in today. And thank you. At any time, please reach out to any of us Extension, and we'd love to serve you. So thank you, and stay warm, I guess. So have a great day.
Thanks, everybody.